Welcome to the live tutoring session. So support and resistance lines, we're going to look at the bigger time frames. These are Heikin Ashi candlesticks trend lines. We're going to look at those. This is an uptrend, so you put the line at the higher lows, and decreasing price, where we've got bearish short movement, we put the trend line at the highs, descending highs. And to build a channel, building an idea of the unknown. So this is the void. This is what we're working all the time. Uncertainty, future uncertainty, the unknown. It's unknown to me. It's unknown to you. It's unknown to anybody you think it should be known to. They don't know. They make their assessment. And they've done it for so long that a lot of them are pretty good at it as well. Okay, so we need 3 points. We're looking for point 3, which would be this level, and we're looking for it to bounce off this level. So you need 2 levels, a higher low. In an uptrend, you need a higher low, which this number 3 is, point 3 is, higher low. 2 touches required to start. That means you can put in a exploratory support line. It's just a guide for now. It's a guide, but at least it gives you some data in the void where there was no data before. This is starting to fill up now. It's just one line, but it's important. Parallel line at the top of the pulse, the upward pulse. Just as a guide. It's only 1 touch, but pop it on, because at least we've got some data over here in the void. Now we're expecting this to push up, and we're expecting at this point that the upward move is starting, price is starting to become vulnerable to a further upward move. There may be negotiation before it carries on, or it may reverse. Probability is that it's going to reverse to a degree. Now it may not come down to here, may come to here, and in that case we can reassess our levels, our points. We can move this trend line a little bit, so we've got a higher low here pushing up. But on the way down, we're going to count our 5 waves, depending on the time frame here, and whether we're in an actual trend on our anchor charts, you know, an upward trend, or we're in a consolidation on the bigger time frames. Because if you remember, we look at if we're intraday traders, then we look at the higher time frames, the 4-hour, which is the industrial sort of standard time frame, a 4-hour chart, and our daily as anchor charts, to combine the data we're getting from those 2 time frames to assess whether we want to get in on our 1 hour, which I'm going to call our trading time frame. We're trading every time frame, I know, but I'm going to call it our trading time frame because there's more detail on the 1 hour. We might even use the 15-minute to get some real detail, to get that our best entry, or what we feel is our best entry. And we'll never get it bang on. If you took out of 10 traders, everybody would be, there's a high probability we'd all be different by a few pips, even if we use the same strategy. Anyway, this is how you build a trend. Now we've had 1, 2, and if this turns, then we'll have 3, 4, 5. That confirms that it's actually a channel. So this becomes high probability of a reversal at this point if it turns here, and these all line up. And you need your 5 points to confirm the actual channel, to say it's a channel. But I call it a channel before then. This is a possible channel. I've got to be careful with my words because I'm teaching here, but in my head it's just, well, I know it's not confirmed. I even know it's not confirmed after we've got 5 touches. I know that this isn't going to happen. It's a probability it's going to happen, that it's going to reverse like that. I hope this is starting to make sense. Real chart here, Heikin Ashi candlestick, so it's not what everybody uses. And these are not standard, they're Heikin Ashi candlesticks, so the colors are less frequently changing from green to red, red to green, but you get trigger bars here as well, and you'll notice they're quite efficient, the trigger bars. Still got to assess how far they're going to go, but there is some hesitation and a change of color at that resistance line, and it didn't work. It hesitated, negotiated, and carried on. What's going on with what Ken just said? Well, I did say that either hesitates or it bounces down, and probability during this period, we'll have other indicators. We won't just have the price action, but the probability is that that's going to drop again at that point. But this is quite, well, even with this strong move, it's still high probability it's going to come down, and it didn't. A very good example of what we're working with. Uncertainty. These are not on and off rules. These are probabilities. You've got to take the hits occasionally and plan for that. Plan your risk management. If you're looking at an idea, then again, it's a daily chart, and you've got 2 days to the downside, so you might get, well, probably you're going to get away with a very small loss or a break even at that point on a reverse trend against this move to the long side, day after day after day. But hopefully on this move, you've made some pips to the long side here. Yeah. So you've got some in the bank anyway, so no need to get disappointed. If you've taken 2-3 trades on the way up, then, or worked it all as one, which if you're swing trading, that's reasonable, as long as you didn't get stopped out just here where it started hesitating at a previous high. That one carried on as well. Previous highs, reversal, probability of reversal, did reverse there, reversed there. Probably this was divergent, so less momentum on the second push, and then it came all the way back down, and this probably is around the daily 50 area, this move to the downside.